So in today's live stream, this is what we're gonna be doing, guys. We're trying to look at price action and indicators. Which one is the best strategy? So basically, that's what we're gonna be doing. We are looking at price action and indicators. Which one is the best strategies? So with me, I have Nancy Tembo, our co-host, who's gonna be defending price action. So I'm gonna be defending indicators. So basically, that's what we're gonna be doing. We're gonna be looking at price action versus indicators. So just to give a brief background or a brief explanation. So when we look at price action, we are focusing on raw market movement, where we are looking at we are analyzing the market without any indicators. When we are analyzing, basically we'll be looking at chemistry patterns, we'll be looking at support and resistance, trend lines, and basically market structures. And when we talk about indicators, we're looking at mathematical calculations that are based on price and volume to provide signals and information on momentum and insight. So basically, that's what we're going to be looking at. So basically, when we talk about indicators, we have different indicators that we'll be looking at. We have trend indicators. We also have momentum indicators or oscillators. Then we have a lot of indicators that we'll be looking at. So we're going to look at which one will be the best trading strategies. People have been debating on this particular subject for a very long time. So today, Messi is going to be supporting what price action, and I'm going to be supporting what price indicators, the use of indicators when they're trading. So Messi, hello Messi,
Hello, how are you?
I'm good. Uh, can you say something?
Hello, everyone. How are you?
You don't
Don't
look
forget to
happy.
go to my YouTube channel.
Did you eat pap?
Why?
You don't look happy. You're not smiling. It seems like you're hungry.
No.
Yeah, okay.
Um,
Okay, so I'm gonna start with the benefits of indicators over price actions. So, firstly, we have objective signals. Objective signals. When we look at indicators, they reduces emotional trading by providing clear buy and sell signals. So there's no emotional what trading. The signals that you get from indicators, they are very clear. You have clear buy and sell signals. Then when you look at price action, they require interpretation, which can lead to subjective analysis. So when we talk about indicators, there's objective signals, but when you look at uh, price action, there's subjective analysis. So that's one point for indicators. Messi, what do you have to say about this?
Can you support your point?
Sorry, you said what?
Come again.
Okay, my point is this. With signals, the signals are very clear. They are clear buy and sell signals. So it reduces emotional trading because it provides clear buy and sell signals. But when we look at price action, it requires interpretation. So in the process of interpreting, is this going to be a buy or a sell signal? This leads to subjective analysis. That's my point.
That's your point. All right, DC. In my opinion, I don't think
Okay, let me just put
indicators.
on my headphones.
All right. I was saying, in my point, I don't think that indicators are the best because indicators they lag. When we look at price action, we are looking at support and resistance, market structure, chart patterns. Price action, it uses real time. It uses real time, and you can easily use it like on lower time frame as compared to indicators. Indicators, they have the tendency of lagging. In as much as you can say that they give those accurate signal, indicators tend to lag when compared to price action. Price action use real time, and we can easily use it on lower time frame. So it's easier to catch spikes using price action than indicators. Indicators, most of them they lag.
Yeah, that's a very valid point. Yeah, there's a tendency in indicators to lag. Yeah, so when we talk about lagging, basically we're saying there's a delay in them providing what a signal. unlike when you're using what candlestick and price action. But still on that point, Messi, we have
Yes.
different types of what indicators. Not all indicators they lag. Because if you say
Mm.
indicators in a broad term, I don't think
Mm.
that is correct because we have leading indicators that are more prophetic. They tell you what is going to happen before they happen. Or for example, oscillators, some of the oscillators they give the signal before it the market starts to move. For example, if we have RSI, there's a divergence. Before even price starts to make that okay, we're talking about a bullish divergence. Before price even starts to make that bullish movement, the indicator, the RSI, for example, it gives it a bullish divergence. It will start moving up before price starts to moving up. So when you say there's they lag, I think it's wrong. Not all indicators lag. Some indicators they lag. For example, the trend trend what indicators they lag, yes. But we have oscillators that are more prophetic. They give the signals before they okay. I gave an example of a divergence. The indicator will start moving upwards before even it will start giving you what higher highs. But if you look at the price action, the price will be making like lower lows. So it's not all the indicators that they lag. It's not always, but it differs with the different types of indicators. So I don't think that's a valid point.
Oh, it gives me another point that when it comes to using indicators, I think there's conflict because indicators they give mixed signals in the sense that there are some which legs and the others will give the signal like what we have been saying. So at the end of the day, you'll see that the indicators there's conflict in using indicators because some will give the signal earlier and others will give signal later. So there's confusion in using indicators. They give conflicts, they conflict themselves. One say buy now, the other one is going to say buy later. So there's conflict. But when it comes to price action, you have a clear entry and exit point. Don't you think that?
Yeah. I think it's a valid point. So, just to summarize, you said a lot of things. Just to summarize, what exactly are you saying?
Yes. Oh, I'm saying indicators, there's conflict in using indicators in the sense that when you are using indicators, there are some indicators that lags, and there are some indicators that, like you were saying, that they are the trend indicators that can give accurate signal. So at the end of the day, there's confusion in indicators because one is going to say buy now, then the other one is going to say buy 5 minutes late. But when it comes to price action, you just have your clear entry and exit point without confusion.
Okay, but still on that point,
What
I
is
think
this woman's name?
most people,
Someone is asking my name.
yes, what's your name?
my name is my name is Messi.
Yeah, it's Miss Temple. Okay,
You can
okay,
also go and subscribe to my channel.
okay. Still on that point, don't worry, I'll put the hair channels link in the description. For now, let's just focus on this. Okay, still on that point, you said there's a tendency of indicators giving conflicting signals, where another indicator will say buy and another indicator is saying sell. Then, as a trader, you end up being confused. I think that was your point. But I think it all goes down to the point that you don't need to put a lot of indicators. The confusion comes when you have a lot of indicators on your chart. That's when they start conflicting. But when you only have an indicator one that shows you the trend and an indicator that shows you the what the overbought and the oversold, I think it becomes clear. Still on that point, I think if you use less indicators, the indicators will not conflict. Okay, can I add something just to support indicators?
It's okay.
Okay, when you look at indicators, they are due for beginner traders. Price action tend to be very complex and complicated and sophisticated when it comes to new traders. It becomes very difficult. I think most of the people who have started trading, they didn't start from price action. Price action, you see, even myself when I started trading, looking at a chart when there's price action and there are lines that are drawn, I didn't want to look at that. Why? Because that information becomes very difficult to comprehend. So for beginner traders, using indicators becomes the ideal trading strategy because it's very easy to adapt and to comprehend.
Yeah, on that one, I support you in the sense that indicators can be easily used by beginners traders because there's nothing much. You just need to follow an order, do this and do this. But when it comes to price action, I think price action, it gives deep insights of how the market is moving. It gives deep insights, and that can only be mastered by experienced traders. So price action is for experienced traders, whereas indicators, yes, experienced traders can also use them, but it's very easy to be used by the beginner traders. So at the end, we will find out that if price action give us deep market insight, so it means there are high chances that we can catch spikes better using price action because it can help us to identify high spike zones. So we can easily catch spikes with price action than indicators.
Okay, it's fine. Do you have a point to support price action?
Hello?
I was saying, do you have a point that can support price action?
Mm-hmm.
Okay, it's fine. You can give a point. Then I'll give another point on indicators.
Price action reduce over reliance on settings. With price action, you just need to know the chart patterns. You draw your support and resistance. Then you check the market. Then you know your entry and exit point. But with indicators, you need to rely on settings. Every time you want to trade, you need to make sure that the settings are correct. And when it comes to indicators, if you don't calculate the indicators will end up lagging, giving you wrong signals. But with price action, it's simple. You just need to know your areas of support and resistance, your chart patterns, what they mean. If it is an engulfing candle, it's meaning then you know when to enter and when to exit. So you don't rely on settings too much.
Michael is saying price action is the best. Thank you so much, Michael, for your contribution. Then please say, I want to know why the market, when it reaches the oversold and overbought, sometimes it continues instead of changing direction. Okay, there's another question. Okay, just to add on what Messi said. Messi, in short, what exactly were you saying? Because you tend to turn around. You don't hit straight to the point.
I was saying that with price action, you don't rely on setting. You just need to know what's happening as the market is moving in real time. Your entry and exit point are based on what is happening in real time. Whereas with the indicators, you are just relying on setting that I have to set my RSI to 10 and 19.
What's wrong following the settings? Is there anything wrong following?
There's not. The wrong thing comes because with those indicators, sometimes the market will not be trending, it will be consolidating, but those indicators will keep on giving you signals, entry point, exit points.
Now. It becomes very difficult to follow what you're saying. That's why I'm always asking for a summary. You're giving two different points here. We're working on one point,
I'm saying
on another point. Okay, that one is a
it's a what?
Let's focus on one point.
Which one should I start with?
That one. Okay, you brought another point where you're talking about signals given what signals, false signals each and every time when there is a range. Signals, they do indicators, they do that. When the price ranges, it gives a lot of false signals. It will tell you to buy, but because of the fact that the price is ranging, there will be a lot of false signals. That's a different point. But now previously you were talking about another point. We didn't get the opportunity to explore that particular point.
The first point was that
you're talking about
yes. Yes, I was saying with the indicators.
So my question is this: is there just to add on that point? I think there's a tendency with brokers; they tend to manipulate these indicators easily. There are times when you look at they can manipulate because they're based on calculations. So there's a tendency where brokers manipulate these indicators, then they end up giving you false data because it's based on calculations. So there's a tendency of brokers manipulating these indicators. I think that's a separate point. So yeah, I think that one is valid. There's a tendency where brokers they manipulate indicators. Indicators can be easily manipulated. So when you focus on the
Yes.
settings, yes, I think that's what you wanted to say,
Yeah, yes, that's the
which is
point.
very true.
So you
Which is very true.
yes. Mm.
Okay. Um, just to add on what on indicators. Indicators, if you look at most of the EAs and indicators that are used by many programmers, they're based on what on indicators. Making an EA or making an indicator is the EA can be coded or programmed from indicators. So indicators there it gives us what an opportunity to automate our trading strategies. That's an advantage. So indicators are very good when it comes to what because all of these trading robots we have managed to create trading robots and indicators that are effective and can be very profitable. Why? Because this is coming from what from indicators. So that makes indicators very very powerful and very very what beneficial when it comes to what trading. If indicators were not working, we would never have an indicator or not we would never have a trading robot that would work because most of the trading robots they come from indicators. So that proves the fact that EA's trading robots work proves that indicators they also work because most of the EAs are coded from indicators.
Yeah, I agree with you. I agree with you on that point that we can use
And you
indicators to
see
make. Uh,
and you see coding an EA that is based on price action is very difficult. This requires I don't know very these are very our expert programmers who can only do that, and there are only a few who can code an EA based on price action. But coding an EA from indicators is very easy.
Yeah, I get your point, and it's actually correct that we can use these indicators in coding. But you know that's why that's why most EAs and all those things they don't perform better as compared to price action. That's why you see that you have an EA when the market is trending. Yes, you can make money, but when the market starts to range or consolidate, the EA will start losing. So it becomes a disadvantage in using indicators. Even if you can use it to make an EA, yes, it's good. But when this manipulation occurs, someone who is trading using price action can easily identify those traps. So that person has better chances of making profit than someone who is using indicators or who is using an EA that was coded from indicators, because that person will not be able to identify those manipulation and those traps. But with price action, you can identify those traps and you know what to do. So you have better entry points or
Uh,
exit points.
go, going back to sorry for that. Going back to the charts, we have Miriam Bulama. He's saying, please say, I want to know. Okay. He asked the question. I want to know what why the market when it reaches an overbought or an oversold, sometimes it continues. It's not always, guys. Yeah, I think that's another thing again. Still on indicators, it's not always when the price reaches an overbought, it has to reverse. Okay, I'm gonna give a good example of the stochastic oscillator. If you say okay the crossing of the oscillator okay I'm gonna end and end when price reaches what maybe I'm focusing on the signal line of the stochastic oscillator. I'll end a trade when price one reaches the 80 level. It's wrong. Or maybe you say I'm gonna enter when there's a crossing of the main line of the stochastic and the signal line 8 above the oversold level so that there's a reversal. It's wrong. The correct way is to wait for the probably the signal line to cross below. When the crossing is taking place between the same signal line and the main line above the 80, then wait again for it to cross below the 80 level. Then I think it confirms the overbought. So you need something that confirms that the overbought has been respected and the price is now ready to move down. Because in a strong bullish trend, price, even if there's a signal that price is going to reverse, it will not reverse. Answers that question. Going to the next question, same. I mean, when I'm using the indicators and when it reaches a level 10, my oversold zone, instead of it starting to buy, it continues to what to sell. how can I correct this? I think what I've said answers that question. When it is reached 10, wait for it to cross above. Probably you are using the RSI. Wait for it to cross above level 10, indicating that it is now ready to move upwards. So these are some of the problems that you will face when you're using market indicators. Then going to the next question. My sister, just say you don't understand how to use indicators. So someone is addressing you. Yes. They said you don't know how to use indicators. Uh, so for me, I understand how to use indicators. My
But
but
sometimes
my
it's
problem
against.
is sometimes against it's true. It's true. It's true. It's true.
You
Very
see, that's
true.
where the problem, Miriam, that's where the problem is. You see, yes, you are, me, I also understand how to use indicators. I know how to use indicators and I also use them here and there. But we are saying with these indicators, sometimes they give us, they lag. That's why they end up being against you. But if you are to use price action, Mary, you'll be able to identify what is really happening. What is really happening in the market in real time, because you can check, here there's a pin bar, what does it mean? Here there's an engulfing candle, what does it mean? But with these indicators, we are just relying on the setting that you are given, RSI 10, MACD level, this and this and this. So the indicators end up being against you.
Okay, just to add on indicators, I think there are two valid points. I'm going to talk about trend confirmation and momentum and trend analysis. So, firstly, when we look at trend analysis, using our moving averages, it's very easy for you to know the prevailing trend that is there in that particular market. Why? When the price is above a moving average, you know that on a higher time frame, I'm going to be bullish. So, I can easily identify my trend using my indicators. But if you look at price action, you have to do this manually where you identify your higher highs and higher lows and a change of character. And if you look at when people are even defining a change of character, they don't agree. Price action traders, they don't agree when there's a change of character. Some people will say, okay, when a previous low has been taken out, that means it's a what? It's a change of character. So it becomes confusing to identify a trend using price action. When you are looking at indicators, it's very easy. On a 1 hour chart or a HO or a daily time frame, when price is trading above the moving average, it's very easy for you to identify the trend. Unlike price action, where you have to trace the market structure and you can be lost in trying to manually identify the trend. Messi,
Yes,
over to you.
yes.
Yes, over to you.
All right, I get you. Yeah, yes, what you're saying, but I beg to differ because me with with price action, it gives you. I think there's fast decision making in price action as
No,
compared
it's
to.
actually slow. Okay, on this point, it's actually slow when you're trying to identify
Mm.
the trend. With me, I'll just see is it above the trend line or is it below? Then I can easily get my trend. But with you, it's not fast. You have to check the higher
No,
highs,
I'll
the
just
higher
look at
lows.
the chart patterns. Yes, yes. To me, it's that way. It's easy. I'll just go. If I'm to check from my H4, then I come to my lower time frame, checking what is happening in those chart patterns. There's fast decision making in price action as compared to indicators, because you with indicators you are just relying
Yes, don't
yes, on
generalize this.
one
We're talking
notion.
about trend. Trend. We're talking, yes,
Yes.
you're generalizing this. We're talking about trend. Do you think
Mm,
it's easier
mm.
to identify a trend using price action?
Yeah, it's easier as compared to
Explain
indicators.
how. Explain how.
You just check the market structure. That's where the market structure come in. In price action, when we are talking about market structure, we are looking at how the market is moving. So that can help us to tell the trend. Is it trending, uptrend, downtrend,
Do you think
ranging?
it's gonna be easier and faster? The question. Do you think it's easier and faster
Yeah, it's
compared to indicators?
yeah, it's easier because with those
Uh,
indicators sometimes it's very easy.
okay, let me go to the next point. When we are talking about momentum and
Mm.
strength analysis. Okay, using my RSI mark G stochastic, they help me to gauge strength and potential reversals. We talked about this. But when you look at price action, momentum is estimated based on price structure and candlestick behavior. You're estimating, you don't have a clear peaks of a possibility of a reversal taking place. But with my momentum indicators in my yes, I can easily gauge, I can easily see if there is a strong bullish movement or a strong bearish movement. So using my indicators, I can even check the strength of the prevailing trend. I can also even check if there's a possibility of the market what reversing. Is it possible in what? In price action?
It's possible in praction. That's where support and resistance comes into play, because
No,
we
we're talking
can
about,
check
there are
where.
2 points. Listen, there are
Yes,
2 points.
yes.
We're talking about
Mm,
the possibility of a reversal, one. And
mm.
secondly, we're also talking about the momentum of the
Yeah,
trade. Are you able
yes,
to check
yes,
using your price action? Using your price action, is it
yes,
easy to
yes.
check the strength of of a what of a trend? How do you do that using price action?
That's where support and resistance come into play, because
Support and resistance doesn't work on
let me
momentum.
continue telling. Why are you
Okay, it's fine.
blocking my
Continue. Sorry,
point?
sorry. You can continue. Sorry.
I was saying, with support and resistance, I can check where price is previously spiked today. Huh?
Mhm.
Can you hear me?
Yes, I can hear you.
Yes. So it also gives, I can also use on those levels of support and resistance. I can combine, I'm not only relying on support and resistance, I'll combine it with chart patterns. I'm now checking on my levels of support, what is there? Is there a pin bar? What does it mean? On my resistance, what is there? I'm now combining it with chart patterns so that I will know what is going to happen. Is the market going to continue, or the market is going to reverse? So with price action, I can easily see sudden drops or sudden rises using price action than indicators, and it's very easy because my support and resistance line, maybe I would have drawn them already. So I'm now just checking the chart patterns, what is coming out, then I can tell what's going to happen. I think it's fast and easy.
It's not as easy as you think when you're using price action to anticipate a
Mm,
possibility of a reversal. There are times when price reaches a support level, then it breaks that support. You are anticipating for a reversal, and you end up losing.
mm,
It gives you signals there. It gives you signals of a possibility of the price reversing. But because you don't have an entry trigger, there's a possibility that you can buy on its resistance, you can buy on a support, and it's anticipating a
mm,
reversal. But the price will
mm,
not respect that support.
mm,
And have you ever seen that the more a support is tested, it can be easily broken. So using your support and resistance, there's a possibility that
mm.
you can end up in a loss. Why? The price will not reverse from that support. But when I'm using my indicators, I can easily spot these reversals with indicators. That's why indicators are the king. Okay,
Okay.
I think our 30 minutes is also we're almost coming to the end of this show. I hope you guys like this discussion that we're having on price action and indicators. Messi Tembo is a channel. We're gonna insert the link on the description so that you guys can support it. Their target is to reach 100,000. Oh, not 100,000. Their target is to reach 1,000 subscribers. Currently, we are sitting at what? How many subscribers do you have?
700
Yes,
and
710.
710.
So their target is to reach. Yes. Your target is to reach 1,000 subscribers. So you need to also go and subscribe to your channel. What's your channel name, Messi? Your YouTube channel
Messi
name.
Tembo. It's
Messi
Messi
Tembo. Okay,
Tembo.
I will insert the link
Yes.
in the description.
This.
Okay, still on that, just to conclude on that, guys. So when it comes to indicators and price action, which one is the best strategy? My final answer, I think we can also agree with Messi. There are times where indicators do not work, like what this guy was saying, Bulama was saying. He trusts indicators, but there are times when indicators do not work, and there are also times when price action do not work. So, what is the best trading strategy? My conclusion on this is a combination of price action and indicators. Yes. And when it comes to beginner traders, if you're a beginner trader, stay away from price action. The best strategies that you can use is what indicators. But for advanced traders, I think for advanced traders, you can make use of indicators, a combination of indicators and price action. Makes I don't know if you have anything to add on that.
No, there's someone who is. Can you read Richard's comment? He said he wants to join
Richard,
you. Mm.
on this live,
Kiwanuka Richard. Yeah, he's saying thanks for the
Richard, thanks
educational
for the educational
information
information.
always. Yeah.
I'm watching from Uganda and asking for a favor to join you, brother. Okay, join in terms of what? You want to join this live sessions or you want to join in our WhatsApp group, our social media platforms? Where can you specify which part of joining you want? Do you want to join our mentorship? Do you want to join our signals? Where exactly do you want to join? Or you want to join us on this particular live? Okay, so maybe we need clarity on that. Okay, OS is saying indicators can never be king. Tell us why you think we explored the different concepts, different what ideas. Tell us why you're saying indicators can never be king. Though your point may be fair to aid into consideration. Guys, let this be more interactive. We want your input as we are discussing because we'll always be checking the comments. We want your input as we'll be discussing these things. Your input is very important. Just to conclude on this, use price action for structure, support and resistance, trends, and key levels. Use indicators for confirmation. Okay. So I think one, when you're using your price action, you can use it for your support and resistance trend and also your key levels. Then indicators, you can now use them for confirmation. A combination of these two, I think, will work. So I think that's my take when it comes to price action and indicators. And I also talked about the fact that if you're a beginner trader, indicators provide easy to follow signals. Then again, for experienced traders, price action offers deeper market insight. I think that's what Messi Tembo said. So the best result is combination of price action and indicators for accuracy and confidence. So a combination of price action, I think, will also price action and indicators will work. So I think the two, I think they work. They work. So you do a price
Yes.
action, then you use indicators for confirmation. Is there anyone with a different?
Richard is saying you want to join your classes.
Just a new. I'm just new to trading. I've been watching your videos, but again, I would like to be in your classes. Okay, thank you so much. Yeah, also free. Get in touch with us. I think I'm gonna set my WhatsApp so that you can. Okay, my WhatsApp number is +2 +2 7 6 8 3 2 2 9 3 0 4. That's my WhatsApp number. I'm also going to put it in the description so that you can get in touch with me for further assistance, Mr. Richard. Guys, I hope you enjoyed. Don't forget to like this video, guys. Share it with different traders on different social media platforms, and don't forget to subscribe to our channel. Help us, guys, to reach our 100,000 subscribers. So this is our journey to 100,000 subscribers in 2025. Thank you so much for being part of this amazing discussion with Messi Tembo. And Messi Tembo, thank you so much for your time, and thank you for trying to defend price action. But I think on this one, I was very strong with defending indicators. And if it was a debate, I think the guys can actually what testify that I won this debate. Guys, who
Let's
do
hear
you
from
think
the
won?
judges.
Was it all the viewers have to judge? Guys, whom do you think actually did a very perfect work when it comes to defending what they were what advocating for? Was it me or was it Messi? Let us know in the comment section, guys. Thank you so much, guys, for your time. Enjoy your day. Thank you so much, guys.